Hey, what's up everybody and welcome to the channel. We've all seen those stock market charts going through the roof, right? People making life-changing money seemingly overnight. But let me tell you, the real secret to building wealth in the stock market isn't about chasing quick wins or timing the market perfectly. It's about building a solid, long-term strategy and sticking with it. Today, I'm breaking down everything you need to know to get started, even if you have absolutely zero experience. We're talking a step-by-step blueprint for beginners to start investing in 2025 and beyond. Want to know the real way to get rich through the stock market? It's not gambling. Smash that like button, subscribe, and let's build your future wealth together. Alright, so you're ready to dive into the world of investing. The first thing you need is a brokerage account. Think of this like your investing command center. It's where you'll buy and sell stocks, ETFs, and all that good stuff. Now I know what you might be thinking. Brokerage accounts sound intimidating. Are they expensive? Do I need to be rich to have one? Here's the truth. Opening a brokerage account is shockingly easy and often completely free. Seriously, it takes like 10 minutes tops. We're talking faster than ordering takeout. There are tons of great platforms out there, but some of my personal favorites are Fidelity, Vanguard, Robinhood, and eToro. Each one has its own pros and cons, but the most important thing for beginners is to choose one with low or no fees, especially when you're just starting out. You don't want to eat into your potential profits with unnecessary charges. Now, once you've chosen your platform, you'll need to create an account. This typically involves providing some basic information about yourself, like your social security number and employment status. Don't worry, it's all standard procedure and your information is totally secure. Once you're all set up, you'll need to link your bank account to your brokerage account. This is how you'll deposit money to start investing. So what are you waiting for? Go open that account and let's get this money. Alright, so you've got your brokerage account all set up. Now let's talk about where to put your money to work. You might be tempted to start picking individual stocks, trying to find the next Apple or Tesla. But honestly, for most people, especially beginners, that's like trying to win the lottery. Instead, I want to introduce you to the secret weapon of smart investors' index funds. Think of an index fund like a basket of stocks that tracks a specific market index like the S&P 500. This means that by investing in an S&P 500 index fund, you're essentially owning tiny pieces of 500 plus of the largest and most successful companies in the US, all with a single investment. Now, why are index funds so powerful? Well, first of all, they offer instant diversification. By investing in hundreds of companies at once, you're reducing the risk of losing everything if one company performs poorly. Second, index funds tend to have much lower fees compared to actively managed mutual funds. This is because they're not paying a team of analysts to pick and choose stocks. They simply track the index, which keeps costs down. And lower fees mean more money in your pocket over the long run. Finally, index funds have a proven track record of delivering solid returns over time. Some popular S&P 500 ETFs include VEO and SPY. Focus on building a solid foundation with index funds, and you'll be well on your way to achieving your financial goals. Okay, so we've covered opening a brokerage account and investing in index funds. Now let's talk about the real game changer, automating your investments. Because let's be honest, life gets busy, and it's easy to let good intentions fall by the wayside. But with automation, you can literally set it and forget it, while your money grows effortlessly in the background. Here's how it works. Most brokerage accounts allow you to set up automatic contributions from your bank account to your investing account. This means that you can choose a specific amount of money to invest every month, like clockwork. Now you might be thinking, but I can only afford to invest $50 or $100 a month. Is that even worth it? Absolutely. Remember, consistency beats timing the market. Even small amounts invested regularly can add up to significant sums over time thanks to the power of compound growth. By automating your investments, you're taking advantage of dollar-cost averaging. This means you're buying more shares when prices are low and fewer shares when prices are high, which can help you average out your investment cost over time. Plus, it takes the emotion out of investing. Simply choose the amount you want to invest, the frequency, monthly is usually best, and the date you want the money to be transferred. Now, sit back, relax, and watch your money grow. Alright, so you've opened your brokerage account, you're investing in index funds, and you've even automated your contributions. You're killing it. But are you ready to take your investing game to the next level? Let's talk about dividend reinvestment, or DRIP for short. This is where things get really exciting because we're talking about the magic of compounding in action. Here's the deal. When you own stocks that pay dividends, you're essentially receiving a portion of the company's profits just for being a shareholder. Think of it like getting paid to own a piece of a business. Now you have two options with those dividends. You can either cash them out and spend them, or you can reinvest them back into buying more shares of the same stock or fund. And trust me, reinvesting those dividends is like planting seeds that grow into money trees. Here's why. When you reinvest your dividends, you're buying more shares, which then generate more dividends, which you can reinvest to buy even more shares, and so on. It's a beautiful cycle of passive income and exponential growth. Let me give you an example. Imagine you invest $1,000 in a dividend-paying stock with a 5% annual dividend yield. In the first year, you earn $50 in dividends. Now if you reinvest those dividends, you'll buy more shares, and your total investment will be worth slightly more than $1,050. The next year, you'll earn dividends on that $1,050, not just the original $1,000. The best part? Most brokerage accounts allow you to enroll in DRIP with just a few clicks. So turn on that DRIP and let the magic of compounding work its wonders. Alright, so you've got your brokerage account, you're investing in index funds, you've automated your contributions, and you're even reinvesting those sweet dividends. You're practically a master investor at this point. But there's one more crucial piece of the puzzle that can make or break your success: learning to ignore the noise and staying calm when the market inevitably gets crazy. Because let's face it, the stock market is like a roller coaster. It has its ups and downs, twists and turns, and sometimes it can feel like you're on a wild ride. It's easy to get caught up in the day-to-day fluctuations, checking your portfolio obsessively and panicking at every dip in the market. But here's the thing, short-term market noise is just that, noise. It's like listening to static on the radio. It's distracting, it's meaningless, and it won't help you achieve your long-term financial goals. Remember, you're not investing for tomorrow, next week, or even next year. You're investing for the long haul, for decades down the road, and over the long term, the stock market has consistently trended upwards. Think about it, the S&P 500 has historically returned an average of around 10% per year. That doesn't mean it goes up in a straight line, of course. There will be years where it's down, even significantly down. But over time, those dips and crashes have always been followed by recoveries and new highs. The only people who lose money in the stock market are the ones who panic and sell when prices drop, locking in their losses. So, how do you stay calm amidst the chaos? First, remind yourself of your long-term goals. Keeping your eyes on the prize can help you stay focused and avoid making rash decisions based on short-term market movements. So there you have it, my complete beginner's guide to getting started in the stock market. It's simpler than you think, right? Remember, you don't need to be rich to start investing. You get rich by starting early and staying consistent. Open your brokerage account, start investing in those index funds. Put your investments on autopilot, reinvest those dividends, and most importantly, ignore the short-term noise. This is how you build lasting wealth over time. Like this video, subscribe, and I'll see you at the top.